Every year, traders move over $7 trillion a day in forex alone. That's more than the GDP of most countries daily. But only a small percentage of traders actually profit consistently. Why? Because they don't use strategies that work. In this video, I'm breaking down the best trading strategies ranked by their actual success rate, not hype. Whether you're trading stocks, forex, or crypto, this list will help you stop guessing and start trading smarter.
Let's get started with the first one, trading the trend. Understanding market structure is one of the most important skills in trading. These are points, higher highs, higher lows, lower highs, and lower lows help you identify the trend and trade with it, not against it. This is the foundation of most professional trading systems. The idea is simple: buy when the market is going up, sell when it's going down. You're not trying to pick tops or bottoms, you're catching the middle of the move. Tools like moving averages and trend lines help identify trends. Best for swing traders, position traders, and even algorithmic systems. It works great in markets like during major stock rallies or crypto bull runs. Trend lines tend to have a win rate between 50% and 60%. You get closer to a 60% win rate when the trend line is respected clearly with multiple touches, at least 2 or 3. You combine it with confluence factors like support and resistance levels, Fibonacci retracements. You trade on higher time frames, 1 hour, 4 hours, or daily. You wait for a clear bounce or retest, not just any contact. On the other hand, when rate drops to around 50% or less, when you force trend lines that don't align well with price structure, entering without a clear structure will bring down more that ratio. Our next strategy is going to be similar to the trend line, but not the same. We are talking about support and resistance. Support and resistance in our trading is one of the most foundational and effective trading strategies. It's based on a simple concept. Support is a price level where buying pressure is strong enough to stop price from falling further. Resistance is where selling pressure is strong enough to stop price from rising further. In other words, price tends to bounce off these levels. Markets are driven by human behavior. When price reaches a level it struggled with in the past, traders react again. At support, buyers step in, expecting a bounce. At resistance, sellers enter, expecting a rejection. These zones are psychological, areas where traders remember past action and react accordingly. Start by zooming out and looking at your chart on a higher time frame like 1 hour, 4 hour, or daily. Look for areas where price reversed multiple times in the past. These are zones where traders previously took action and likely will again. The more times a level has held, the stronger it is. Once you've marked your zones, don't trade immediately. Be patient. Watch how price behaves as it approaches the support or resistance. Are buyers slowing down? Are candles getting smaller? Is momentum dying off? This is your early warning that the level might hold again. Once you've got your level and confirmation, now you look for your entry. If buying support, enter after a bullish signal confirms the bounce. If selling resistance, enter after a bearish signal confirms rejection. Now that you mastered those strategies, to finish with the video, to everyone that has made it this far, we are going to put an analysis from one of the best charter in the world. Here we will see a clip of how a pro explains his trade. Hope you enjoyed the video, and make sure if you want to see more videos, drop a like and subscribe. That way help us a lot.
I was ranked 3 times in the World Trading Championship, day trading division, and I was vice champion for 2 times with a total performance of 350% over 9 months. And here are the best trades I took in the competition and why I took them. So let's start from the beginning of the session, and we can see that before the starting of the session, it was almost 12 Central European time, we had some kind of balance here. The market was really trying to understand where to explode, and also on the upper part the profile was really clear. We didn't have a clear direction here. We had the market trying to break out on the upside, to break out on the downside. And if you only use price action, in this moment you are pretty confused. You think that nothing interesting is happening, and you just think that you need to wait. But volume was telling us something different. And I want to start today letting you understand the power of the cumulative volume delta and the concept of the volume spread analysis. So this is one of my most profitable trading session that I had in the quarterly World Cup of Robbins, and it's a super directional session, and I just capitalize on the market collapsing on Nasdaq, and I will let you understand why there is a big difference between watching only price and adding volume to your narratives. Let's start with the situation we are in from the price action perspective. We can see that the market is balanced at this time, and if we plot a profile for the current situation, we can just see balance, and there is the fair value on the middle. There is no clear direction. But let's start with the first leading volume indicator, that is cumulative volume delta, to try to understand if in this moment we were building some kind of pressure. Let's start with the cumulative volume delta and let's compare the two. So the market was balanced at this time, but as you can see, the direction from the pressure of the market and cumulative volume delta is pretty huge, even before the breakout. So the market is clearly building pressure down. This is the delta of the volume. And we are in a condition of accumulation and distribution. In this specific case, this is a distribution. Now, I receive a lot of inquiry and questions. And Fabio, can you please clarify this? How can I diversify and understand if you are in a condition of accumulation and distribution? This is the way, because the volume is leading the price. So the volume is showing us that we were distributing and we were ready to explode short. But this is not enough. This is only the first milestone for my trading model. So I will add the second confirmation that you can get from this. I will remove the cumulative volume delta and I will go inside the deep trades model. Now, so big trades, it's an indicator that we are developing in our proprietary platform, and it's something that is really giving us an edge in understanding where the big players are pushing the price. So what we can see at this moment is a clear balance condition in the market. And the first moment that we had some kind of follow-up on volume and confirmation from price was exactly this candle. This was my first position because the market told me, Fabio, we are going down, the volume pressure is down, and we have the price action that is following up. So I had the first position here. Now, for those who follow me and understand my strategy, my way of trading is keeping drawdown really low, building the profit for the day, and then risking again the profit. So what I'm seeking and what I'm searching for the session is explosion in market movement, and this is exactly what I want. This is the first confirmation that we are in a condition of out of balance. We were in distribution for all the session, and now we are starting to go down. This was my first position, exactly this one. And this was, if I'm not wrong, this was 30th of December. So we were on the final days of the competition. We were head to head with Nasri Khan. And the first position went to break even immediately. So the market exploded in my direction and I put my stop loss to break even. The first stop loss was here. So the risk to reward was pretty huge on this position, because if we can consider that I closed this position, the first position was closed around here, it was almost 1 to 3, even more 1 to 5 risk to reward ratio. This is one of my way of managing position sizing, is when the market is giving me another confirmation that the sellers are pushing the price down, I put my first stop loss to break even, and I can consider to close the first trade and open a second one with the profit of the first one, or just continue to add to my position in direction of the trend. Then I was in live commentary with my business partner, and this was the first position, this was the second position, this was the third position, and then I closed all these trades here in the second accumulation phase. Why? Because I start to see that the big trades are not pushing anymore the price down. We are in a redistribution phase. And this is another concept that is not well understood by traders. They try to guess if we are in a accumulation or distribution only using price action. And this is something that is not really convenient. So from this moment, I waited and I took some profit and I used half of this profit to risk again. And again, as you can see, is as clear as possible. You see again the price action breaking down. You see again big trades in the direction of the trend, because we studied auction market theory and we know that this is a sell model day, and we continue to sell. And this was another huge take profit because I used part of the profit in this position. So we already commented, we already had a commentary of 5 different positions that were trailed as the market was moving. Another position, because I closed the session around 4, another position that I took was this position. And this is another model that I use. As you can see, the market is breaking down, okay? And I see that the big trades is holding, the price is trying to retrace. The buyers are trying to take control of this market condition, but the results is almost zero. So to do this kind of analysis, I usually use the delta profile footprint. So we will now open the profile footprint and the cumulative volume delta, and we can just zoom in on what was happening at this moment. And as you can see, I was using volume spread analysis, so the direction of the pressure of the volume and the result of the price. In this exact moment, this exact candle, the result of the price for a pressure in buy delta was almost zero. So this is a confirmation that the buyers are punching a wall, and I want to be short in this position. So this was again a short position, again a short position, and as you can see, as soon as the market approached the all-time low for the day, you see big traders sell, continuing to push down. This is your opportunity to put the risk to zero, to put your position to zero, and again the market collapsed. I took profit for this position at this level, that was the low of the day, and I was sitting at a huge profit for the day, so I didn't continue to load my position during.
Hope you learned from one of the best traders in the world. Remember to drop a like and subscribe. That is a huge help for us to keep making this videos. Thanks for watching, and be safe from the market's titans.